All right, I'm live. No, I'm live now. All right, sorry for the little technical problem. February 25th, week of February 19 to 23, and I am for the beautiful Jackson Hole and the Snake River Lodge. Just arrived and joined Jack Daniels. But let's get down to business. Let's start with the week. General Electric, a lot of articles, a lot of coverage about the story with the company. Still not a buy. Too many stories, too much of liabilities and stuff. Even if they split the company, it doesn't look like a lot of a great story. We talk about that. The big thing, company news last week was Walmart. Walmart reported decent numbers, a good growth for a $500 billion company. However, when you look at the growth of their internet business, what so far was doing well, it decelerated from a 50% growth to a 25% growth. And the CEO acknowledged that it's not so easy to go from bricks and mortar to a business of the internet. Because of that, stock was down 10%, and Amazon hit an all-time high. Clearly, that's the battle for the online sales, and we will follow closely. So far, Amazon is ahead. A bunch of firms came, Morgan Stanley, Goldman Sachs, talking about a cheaper dollar. 130 on the euro, 101 on the yen, 138, 140 on the pound. Basically saying twin deficits, growing economy. It's not a good recipe, and more than anything, it's just not that the dollar is bad, but that the other economies are stronger. Europe is growing, Asia is growing. So FYI, many people negative on the dollar. We'll talk about that. As we said, we're a slave of the numbers. We need to look at the numbers all the time, given on what's going on. So the issue is we have treasury issuance. So the market was up 250 points. The treasury issuance in 2 years went bad. The market went down. The next day we had 5 and 7 years. The market was 200 points. The treasury issuance was bad, but not as bad as expected, so it only went down 100 points. So we're very much dependent on what the numbers are saying and what's going on. So we'll follow up, and also we have then the minutes of the FOMC meeting where the members say that they see a strong economy. So many people start talking about a stronger Fed movement, even maybe 4 increases in rates during the year. So in any event, the market was worried about that. However, at the end of the week, the market says, the hell with it, we're going along, 350 points. Our analyst thinks that the correction is over, and from here, we're going to start slowly climbing. Also, people like PIMCO, the largest bond fund in the world, came and said, we think that this thing with the rates, raising rates in long bonds is over. We're going to go long bonds here because inflation is very, very slow, and it's a global phenomenon. So, it's not going to happen soon. Globalization is deflationary, so they don't think that inflation will accelerate. And talking about that, European inflation came from January 1.3, but in December it was 1.4, and in November it was 1.5. So we have decelerated inflation in Europe, which is way below the target of above 2% of the European Central Bank. So with all those ingredients, the bond market calmed down a little bit, is expected, and clearly, like the game of wolf, let's play because the wolf is not around, and the market rallied. So that's there. On some of, there's a big article today on barons on energy. A lot of talking. This is one of the trades that we have not gone well for us. We haven't got it. I read the whole article. I'm as lost as the beginning. Oil goes up, the companies don't follow, and vice versa. So we're still lost on this oil trade. And 2 trades that we like, Russia, that also we missed last year a lot, up 9% for the year. We'll look more into that. Brazil is up, but it got downgraded at the end of the week because it looks like the pension reform is not going to happen. So that's there. That's on that. For this coming week, we have on Tuesday, Jerome Powell speaks for the first time at the Humphrey-Hopkins Committee, so we'll have the first presentation of the new chair of the Fed. We'll look into that. We don't think it's going to be anything new, but at least it's the first time. We have Q4 GDP on Wednesday. The market expects a small correction from 2.6 to 2.5. It's important, we look into that. And then on Sunday, Italy goes to the polls. And again, key for the European Union. Looks like the Silvio Berlusconi party will win, but also remember there is extreme right and extreme left parties that are gaining some power. That's all. I'll be this week in Jackson. We'll be transmitting from here. And now, before we go, I'll share with you some nachos and Jack Daniels, and have a great week. We'll get you next week. Cut it. Good?
Really good. Really good. So I should have hit one of those ones. You're running out of battery, but I want to see it. Watch it.
All right. Yes. Oh, it's still live, baby.